Anarchapulco 2016. I'm with Trace Mayer. Thank you for taking the time.
Yeah, glad to be here.
Yeah. So there's a lot of stuff going on in Bitcoin right now that is very confusing to people from the outside. I was wondering if we could sort of break down maybe some of the major players in the Bitcoin block size debate, and um, especially, yeah. So who are what are the two major sides or two three major sides, and what companies are behind them? What, maybe, yeah.
Well, I wish we could say that they were major players on both sides. That would actually make me happy because I would like to watch a basketball game with evenly skilled players on both sides. But really, we have Jordan's Bulls, with Jordan and Scottie Pippen and Dennis Rodman. And then we've got a couple of second string junior varsity high school players on the other side. And it's just so unevenly matched that it really makes you wonder, like, why there's even a debate at all.
What's the other side?
So there's Bitcoin Core, which is composed of 50 plus developers. You've got Dr. Adam Back, Dr. Peter Wulla, Dr. Vladimir Vanderlaan. You've got Alex Morkos from Hudson River Trading, who's now running Chaincode Labs. You've got Sudar, you've got Jonas Schnelly, Greg Maxwell, a bunch of just people who've contributed thousands and thousands of lines of code to Bitcoin. Peter Wulla, for example, has rewritten the one of the libsec libraries, which is just fundamental. OpenSSL had problems in it. And then on the other side, you've got some people who contributed to Bitcoin in the early days, but for the most part haven't made any contributions, let alone significant contributions in the last 3 to 4 years. And Bitcoin has gotten much more complex, much more technical, and required a lot more professionalism and skill than it did 3 or 4 years ago. Like, this isn't amateur hour anymore. Like, it's professional hour. And so Gavin Andreessen, Mike Hearn, Jeff Garzik, and that's pretty much it in terms of Michael Tuman, whoever that is, are the only people on the other side, which is Bitcoin Classic. And for the most part, even Gavin, I would consider a Bitcoin expert. But even with Jeff Garzik, I've been asking Jeff Garzik what his top 3 commits are to Bitcoin. Like, what are the top 3 things that you've contributed to Bitcoin? And he's never provided me with a single GitHub commit URL. You want to be a Bitcoin expert? Cite me some code. Show me the GitHub commit. And then we'll compare stuff. Because that's how open source works. It's a brutally honest meritocracy. Brutally honest. And if you're not good, that's just how it is, And, if you don't get enough time playing on the basketball court, it's because you're not good enough. And it seems that there's some people that haven't been contributing. They're not getting enough playing time on the court. And instead of realizing that maybe they're a little bit older and past their prime and just aren't good enough anymore, instead they're going to the crowd. And the crowd looks to 3 or 4 years ago and like, oh, they're a really good basketball player. Well, they were for where Bitcoin was at years ago. But for where Bitcoin is today, nah, they're junior varsity. Cite me some code. GitHub commits. Show us how good you are.
Cyberpunk style, right? That's bringing it back.
Write code. I mean, it's really that simple. You want a pull request put in Bitcoin? Write some code. Don't take it to the crowd. Don't take it to the spectators. You're on the freaking court. Keep it among the developers. And there is unanimous agreement among the developers. Like 23 out of 25, Gavin and Jeff Garzik, the 2 outliers, that are in wide agreement that there doesn't need to be any block size increase or anything of that nature. Like, why is there such unanimous agreement? And why is it that the 2 people who disagree haven't really contributed any code for years? like significant code. Cite me some code. Show me the 3-point shots. How many triple doubles have you had in the last season? That's how brutally honest meritocracy. That's how we get the best to contribute. We want to squeeze every last ounce out of these developers, and we want it to be the very best developers. We don't, this isn't personality or making friends. Like, we want the best code possible. And the way we get that is brutally honest meritocracy. And you can prove how good you are. GitHub commits. Point to them. URL. Show us.
Well, there it is. There's the answer.
It can be hard on somebody personally, right? But it's just how it is. We expect it of our professional athletes. Like, why wouldn't we expect it of our professional developers?
No, we can't be playing nice and sort of just pretending that people aren't as good as they are when there's billions of dollars on the line, right? This is like life or death for a lot of people. Or it could become at some point, right? We're building potentially a huge infrastructure for finance globally for the next 100 years. Like, the scale of this is massive, right?
Yeah, we're talking there's $6 billion currently in market cap. Who knows how much in colored coins and other assets on top of it, or contracts that are running or executing. And the cavalier attitude of people like, Brian Armstrong from Coinbase. Oh, I'll bet $5,000 a hard fork will work out just fine. Man, that $5,000 of your own dollars? Awfully nice of you. But, at the end of the day, $5,000 is nothing. There are people holding millions and millions of dollars of Bitcoin. They don't want bench warming, second string, junior varsity amateurs playing with the ball. When Michael Jordan passes the ball to you and you miss the shot, you don't get the ball passed to you again. He passes it to Scottie Pippen or to Karl Malone or to John Stockton or to Dwayne Wade or to LeBron James. That's who gets the ball. You know why they get the ball? Because they're good enough to get the ball. Cite me some code. That's what the mantra should be. It shouldn't be no personalizing of anything, like looking at motives, trying to uncover conspiracy theory, this or that. Cite me some code. That's how we see who's good and who's not. Brutally honest meritocracy. This is open source software.
Excellent. That speaks very much to one of the questions that I wanted to ask you, which is kind of buzzing around the ecosystem, and is what is the governance model of Bitcoin? Who gets to make the decisions as to what software goes on? And some people are saying it's a democracy. Some people are saying, no, it's not a democracy. You're saying it's a meritocracy, and it's sort of a brutally honest meritocracy. It seems like it's very much rooted in the cyberpunk movement that boomed in the sort of mid-90s and they kind of quieted down and sort of coming back to life with Bitcoin. Would that be your answer? How do you... Yeah.
Well, I think every individual makes the decisions themselves on what software they run. One of the reasons I funded Armory was so that individuals could hold the private keys to their own wealth. You have to, and when you're doing that, there's network consensus and there's economic consensus. And network consensus are the network rules of the protocol, which Bitcoin Core for the most part does. And Armory is where people can do their own economic consensus, where they can validate their own transactions, the actual wallet. And, one of the reasons that I personally don't like Electrum that much is because you're relying on Electrum servers. You're going out and you're getting information, or blockchain.info or BitGo or Coinbase or Circle. You're not doing your own economic consensus, your own validation, which is one of those core principles of Bitcoin, that you're able to prove that you have Bitcoins or not. Not that you're relying on somebody else, but you're proving it yourself. And that, I think, perhaps a lot of people have kind of gotten away from that. They like to open up their mycelium wallet on their cell phone and think they have Bitcoins because it says they have Bitcoins. But they aren't actually performing their own economic validation, which is fine. Like I use Bread Wallet and I use Copay and a lot of these other, lighter wallets. But I think it's vitally important for people to understand that they need to be able to do their own economic validation and their own network consensus. That means that the individual votes what software they run. And that's the governance model. The individual choosing which software they want to run.
All right. So if the miners decide that we're gonna go with small block stream, sort of that what they want to put, right, and then through media attention, Jeff Garza and all of them say no, we're gonna go with classic, and there's sort of a split between miners and merchants and people that are running just full nodes, no mining equipment. What happens? What happens to that?
I mean, a nuclear option is, you could change the proof of work algorithm and all those miners get forked off the network just like that. Poof, gone. And all that custom equipment, worthless. They can mine as many blocks as they want, but if the way that you perform economic validation doesn't recognize their proof of work, then they're not doing proof of work that you're paying money for or that you're allocating value to. So that's one way it could play out. This is a very interesting ecosystem with lots of different incentives that all align the way that they currently do. And you try to disrupt any particular one, it could be pretty interesting to see how that plays out. And at the end of the day, it's subjective value theory. Things are worth what people are willing to pay for them. So, you change the proof of work algorithm, and now everybody goes on down the road thinking that that's the coin that they value, and they value it for a particular reason. Hey, that's how it works.
Right.
And we've seen that happen, right? Because the miners were doing validationless mining, and they got mining down a chain where they weren't actually checking the validation rules, so they were mining down the wrong chain, and it forked the network, and eventually they were brought back into consensus. But the miners lost something like $150,000 worth of block rewards or something. So just because miners have mining hardware doesn't mean that they enforce all the rules. At the end of the day, individuals enforce the rules.
So it's node count, right? The majority of nodes, what, 75% of the node?
I mean, node count can be spoofed. You can fake almost all of this stuff. You know what you can't fake? The blockchain. And if you validate the blockchain yourself, then nobody's going to be able to fool you on that. Even a Sybil attack, if you wait long enough in terms of confirmations and know that you have wide enough reach in terms of network and discovery and stuff like that, I don't even think poses that big of a threat.
Well, what about this? Let's say that new Bitcoin node comes up, right? Like new implementation of Bitcoin, Dr. Evil Bitcoin, right? And and then they, $20 to host a node on Amazon, right? They dump $150,000 into it. They have 7,500 Bitcoin nodes running. Could they influence sort of what software is going to be majority?
Well, I mean, at the end of the day, you're still counting on people taking Bitcoin in exchange for some valuable good or service. And so I suppose if somebody wants to be fooled by those nodes, and so they're under a false impression that they're receiving something of value and they're not, they're receiving fool's Bitcoin instead of real gold, right? Then that could injure people. But it might just be a lesson in performing your own economic validation, running your own node, holding your own private keys, just like Mount Gox taught a lot of people to hold your own private keys. Like that's a good lesson for a lot of people. I didn't lose any money in Mount Gox. I really don't like other people or institutions holding private keys to the trust minimized to the least degree possible. And along with holding your own private keys is performing your own economic validation. It's really that simple. And I would love for there to be like 4 or 5 different development teams that were all approximately equally skilled, and I could choose like which particular implementation I wanted to run. But, Bitcoin's not really there yet. I'm not willing to fund a development team. I mean, how many tens of millions of dollars goes into Bitcoin Core every year? I mean, it's a lot of money. All those developer hours and everything. You gonna fund it? Who's gonna fund it?
That's a great question. So how is Bitcoin development funded right now? Who are the people putting up that money?
Well, there who is and who should be. I know we had actually hired Jeff Garzik at Bitpay because I'm a seed investor in Bitpay. I think we had laid him off because we had laid off, like since this block size debate started between Kraken and Bitpay and Armory, we've laid off over 50 people. I think that Gavin works for Coinbase, and Mike Hearn works for Circle and R3. And then on the core side, you've got Chain Code Labs, which is Alex Morkos and Sudar. You've got Blockstream, of course, which have a pretty big chunk of the really high quality, prolific developers who were all big Bitcoin holders before Blockstream. And then you don't really have, I don't think any of the big miners actually fund Bitcoin core development. And even the exchanges, like I don't think we have a core developer on staff at Kraken, BTC China or Huboy or Itbit. I don't think they have core developers. So for the most part, they're just free writing off of core software that gets written, right? You disagree with the code, like write your own code. It's really actually pretty simple. And so, those are the big players, I think, right now. And Blockstream's raised like 70 something million dollars.
Any idea who's invested into Blockstream?
So Reid Hoffman from LinkedIn put in like $15 million in the seed round. And I forget all the people they listed in this recent raise, but they've raised some serious cash. So Bitcoin's not going away.
All right. Do you think there should be incentive directly from the blockchain, from the block rewards, to fund node count or node hosting?
That it would be nice if we could figure out some way to do that, but I don't really think so. I mean, I've followed the Dash project, and they have some interesting ways to guide incentives through voting and master nodes and stuff like that. But I don't really know how efficacious it is. It's an interesting experiment. I'd like to see how it continues to play out with Dash. Keeping things simple, I think is more important. We don't want to break anything. There's a lot of value at risk. Bitcoin is the first mover. If something is particularly efficacious, it can always be rolled in, probably after it's been alpha and beta tested somewhere else.
Yeah. Well tested, yeah. Yeah,
This idea of just changing a constant and not having done a whole bunch of testing and review just reeks of amateur hour. Just it's really, it's really a bad idea. I got a couple friends at Princeton, PhDs in distributed systems, all against increasing the block size. And they have access to this massive computer that can test and simulate distributed networks across all different types of bandwidths and geographies and all types of stuff. Theory, logic, data. That's how we make decisions in science. You know, so far, all I've seen for the most part in this block size debate has been theory, some attempts at logic, which haven't persuaded me, and little, if any, data whatsoever. I want to see data, block propagation times, uh, and drawing false analogies, where the logic just doesn't follow, uh, serving blocks 4 times the size of an average web page, for example. Like, that doesn't hold. Like, we're talking about completely different things. It's a completely wrong analogy. It's like saying, this thing has 4 legs, therefore it should be able to go the speed of a car or something. It's completely bad analogies.